Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, December 26th, 5:12 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the follow-through days on November 1st and 2nd. You can see on the trend gauge over here, we've got the much coveted 4 green arrows. Tells you the market and leading stocks are in the really the best condition that we can request of them. Honestly, really good action out of leading stocks since the follow through day on 11/1. It's really the follow through day, and the O'Neill formula for getting into leading stocks couldn't have really worked much more perfectly than it has since that 11/1 and 11/2 back-to-back follow through days. And then, of course, we look at the 5 major indexes across 3 time frames: the short-term 21-day moving average, the medium-term 50-day moving average, the long-term 200-day moving average. In addition to market leadership, this dictates how much capital we allocate to the market for clients, and all 5 of those major indexes are trending above all 3 moving averages. So green across all 3 time frames. So what happened today? Day 2 of 7 of the Santa Claus rally. This is a 7-day, the last 5 trading days in in a prior year and any current year, and then the first 2 trading days of the next year are considered the most lucrative historically, up 1.33% on average for that 7-day period. And it continued on day 2, just kind of a slow melt up after a mild gap up, a little bit of a pullback the last 30 minutes, but good breadth and good numbers. And here they are, the big 7. This is this is the big 7, Magnificent 7, formerly known as the FANG stocks, up 0.37%. So some lagging here today. Not a problem, because when you've got broad strength, and I mean 11 out of 11 spider sectors up, that picks up the slack. RG8 is our 8 growth ETF composite, up 0.9%. S&P 500 gapped up 0.1%, just bled higher from 9:30 all the way up to 3:30 Eastern time before a pullback into the close, but closed up 0.42%. Market or equal weighted S&P 500, the RSP, up 0.57%. NASDAQ 100 up 0.6, equal weighted up 0.74. Dow up 0.4, mid caps up 0.75. Russell 2000 small caps up 1.24. Global 60/40 up 0.30. That was mostly stocks, bonds, in a tight range today. In-house GROTECTION up 0.70%. Some of our leaders doing their job, and our index exposure also chipping in. So let's get to the charts. Here you can see the gap up on the S&P 500. Not a clear a gap from the close, but not a clear gap above the high of last Friday. But you can see the new high close still extended from the 50-day moving average, 6.6%. In a broad bull market, well, let's step back a second. You never know that you're in a broad bull market until you see the action of leaders and the no give back in the indexes. And when you see strength and it follows to the upside, I'm really pointing to these 3 inflection points. The first one being the Fed, the second one being a CPI report, the third one being that was the Fed again. So continued strength. 6.6% above. Is it something to be concerned about? Well, I brought out the yellow caution, and we had 1-day pullback, and we regained those 3 days. I pointed out last week, as long as we hold the lows of that broad pullback day, which is on 12/20. What we don't want to see is a follow-up to the downside below the low, very similar to what we saw on 7/27, and we made a higher height today against the high of that day. So we could rhyme, but not be. I mean, there's nothing saying that we can't sell off below that over the next couple days, despite the fact that we've got seasonality in our favor and the Santa Claus rally, and we made a higher high. But we've got a plan for all outcomes. Right now, we're trending above the 8 EMA, and we like it. Yes, we do. Like the Rolling Stones sang oh so many years ago. NASDAQ 100 Also a gap up, making a higher high. Dow Jones Industrial Average making not quite a higher high. You can see the relative strength line weak on this, despite the fact that the chart looks fantastic. But we put both of these together, honestly, and you would think this is the place to be. But this chart, look at the peaks on the relative strength, going back here to August, to September, to October, and to late November, and those peaks are above where we are right now on the relative strength line, which means the S&P 500 is outperforming this index despite how beautiful the chart looks. Mid caps, higher high. What more can you ask for, really? And small caps, a higher high. This is bull market action, so we'll stick with it. It's like when you're surfing, you get on the wave, you never know how long it's going to take you, but we're going to ride that wave until it ends. VIX down on the day, started with a gap up. A little unnerving to see the VIX higher by 5% when the market is also up. You start to question, does the VIX know something that we don't? But it faded as the days went along, and there may be some VIX futures rollover tied to this also. UUP, I've got a request in to fix this chart. Really, we can't be concerned about this big gap down, just what it's been doing relative since the gap down. There's a distribution in here. This is why the chart is skewed, but MarketSmith normally fixes the chart when those distributions occur. But for now, dollar making lower lows helps stocks. How did it help the gold complex? GLD up 0.76%, clawing back since that failed breakout, up back near that level again. Gold stocks clawing back those losses, also back to the top of its range, up 0.35%. Silver up 0.36%, nowhere near those highs of that breakout. And Bitcoin and the Bitcoin complex, a rough day today, down 3.7%, did bounce right where we wanted it to at the 21-day moving average, and now it's lower to the lows of this recent consolidation, 1, 2, 3+ weeks now. Very nice tight action there on Bitcoin. Let's go to bonds. Broad bond index BND just barely up a tick. TLT, the 30-year long bond, up 0.3%. That means yields were down. 30-year down 0.27%, and the 10-year TNX down 0.38%. So let's get to the tail of the tape now. You can pause this. I'll hit the highlights. Santa Claus Rally, day 2 of 7, as I mentioned. The average gain 1.33% for these 7 days right now. The last 2 days up 0.59%. That's 3 straight up days since the bounce off the 8-day exponential moving average on the S&P 500. 37 days above the 21. 6-hour trend up. Sell off the last 30 minutes. 11 out of 11 sectors strong. Those are the 11 spider sectors led by oils. Also, semiconductors, biotech, and regional banks strong on the downside. Bitcoin and jets, because of we had a 3-bar break up in USO. So oil putting in a higher high, higher fuel costs, not good for airlines. For the portfolio, we made small adds to AMD and to NRGU as strength continued in the oil patch. We also added some T-bills to the cash that we've got sitting. We're not going to be putting a ton of cash to use until a little here, a little there, but unless a name jumps out at us with a some sort of a catalyst, we're just going to kind of trade around the cores while we're this expected. We've got our core positions in place, and with the indexes being as extended as we are, we're not going to pile the remaining cash in, but we'll put it to T-bills to use it until we need it. Bottom line on the day, Santa Claus Rally, day 2 of 7. Broad strength across sectors and market caps. S&P 500, NASDAQ 100, new year-to-date highs. Gotta love it. Let's take a look at a couple of charts. We'll start with the portfolio and what stood out today. AMD, the standout. We've talked several times about how this 4 days, this big 4-day move up after they had a conference and a Q&A afterwards, This was big buying, big positioning by institutions. Then we've gone 2 weeks sideways and now broke out of that range today. 18% below average volume is good enough for me during a holiday shortened week. So we got above that high of that attempted breakout last week before we pulled back, undercut, reclaimed the 8-day exponential moving average on that shakeout day. And we've seen a ton of this. Best case scenario, I pointed out in the videos that day and the days after would be to reclaim the 8 right away. And we're seeing that, and that's really bullish action, and we're pretty happy to see it. Snow, AMD now our largest holding. Snow, our second largest holding, up 1.5% on the day, undercut and reclaimed the 8-day exponential moving average as well. GitLab, half-size position in this, back above, undercut but reclaimed the 8-day exponential moving average. A lot of these are happening on light volume, which I'm seeing across the board in leading stocks. You see something with my scan only showed 4 names today that are liquid enough for us to consider, that were up on 50% or more average volume. Lots of relative strength new highs, but the volume just not there because of it being the holiday week, which is very typical. What else acted well today? TMDX, this is a bit on the thin side, but continues to make higher highs after its earnings gap up. And MongoDB, MDB, which initially had a bad reaction to its earnings report, continues to recover, bounce off the 21-day exponential moving average. Today, we'll take a look at NRGU, which we added to today. Broad strength on the oil complex today. When this gets moving, it can really move, as judging here back from July through the end of August. And just getting started now, less than 2 weeks above the 21-day exponential moving average, we know this thing can run. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. You can post a comment on YouTube. Please subscribe and like the videos to help us out. If you're interested in becoming a client, my partner Dan Stewart's ready to take your call or email dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. As I always say, it's not how much you make in the markets, it's how much of that you can keep. But we're less concerned about keeping with the market being as strong as it is. And we're really focused on making with the got to make hay when the sun shines, the wind is at our back, whatever cliche you want to use applies in this market, in the markets as they currently are. We know that can change at any time, and we're prepared if that should happen. And with that, I'll wrap up the video for Tuesday, December 26th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.